Good morning, welcome to Morning Outlook. This is Kim speaking on Friday the 27th of October. So, well, choppy old day we had yesterday at times. Let's just before I look at the data, look at what's coming up today and just review yesterday's data. Let's get the right buttons here. Right, let's skip on to Forex Factory. And, well, let's just refresh yesterday's data here. So, yesterday, we had there we go. So advanced GDP. So we'll start off with the ECB. Their left interest rates the same. Advanced GDP, we saw that increase to 4.9 versus the 4.5 expected. So all these data, the price index increased to 3.5%. The durable goods 0.5, that's the core durable goods, so even taking out the factors such as aeroplanes and things, 0.5, so it's still positive. So lots of positive data still for the US here. Pending home sales, that came out positive. Overall, it's a far more positive picture that we're seeing in the US than we are in the likes of Europe, Canada, many other places. We're seeing much more of a slowdown. Now, I'm not suggesting these positive figures are going to continue all the way through, and this is just a flash level of numbers, but the general trend is much more positive data for the US, and we've seen relatively negative data elsewhere. So on that basis, if you were looking purely at the fundamental picture, well, the US has it at the moment, and it would suggest that the US economy is stronger, and if you were looking at currencies, it would probably favor the US dollar for now. Okay, let's look at then at today. We've already seen Tokyo inflation coming out there. That came out higher than expected. Not had a great deal of effect on the yen, but there you go. That was out earlier. We've got coming up. We've got the core PCE price index later. Another inflationary figure. All of these figures, I say, they put the pressure back towards the Fed in terms of whether they do increase again when they next meet, or at least leave it higher for longer. It seems to be the general pattern there. Anyway, and the revised consumer sentiment. So some data there, which well, certainly the PC price index could give the markets a little kicker. So let's have a look at the technicals. Start off looking at the euro dollar. We'll start off looking at the dailies here. So we saw the breakdown yesterday, breakdown out of this channel. We'd seen that happening. It did eventually catch a bounce later on in the evening, actually early evening, 6 o'clock bar there, just sort of bouncing a little bit, coming off again just as I speak a tad. It's not just looking at these markets. It's certainly looking at this short term. It's rather indecisive. We've seen this with the euro more than other currencies at times, and I won't be looking to try and trade this, even though there's the potential for this to be rolling over further. Technically, the bigger picture is still to the downside there. As I said, we've seen the breaks, but it's horrible and choppy at this stage of the morning, particularly. Might shape up better for this afternoon. The pound is still in its solid downward trend there. Yesterday, again, it just caught the bounce later on there. They all seem to recover sort of mid-morning. Sold on the sort of news sort of bar, and then bought again a little bit later. But it's quite choppy what we're looking at here. This is a 4-hourly. It's looking quite choppy. When you start coming down to the hourly, again, it's quite a messy market there. My preference would be selling this below the daily pivot. We'll see how it develops. You can see how pinched the pivots are today as well. Just looking at what's comparing. Saying that, yes, they were pretty pinched yesterday, and they still remain pretty pinched again today. Dollar yen. Well, yesterday we saw that spike running upwards there. Reaction to that, we'll see what happens again. It is still drifting to the upside though, and looking at some of the yen crosses, we'd seen some sort of quite highs. Consolidating messy. I'll just leave this alone. There's just no point me trying to do anything with that at the moment, and it's very important you know when to leave currencies, and just, you know, it might be a one that you trade a lot. Well, what's the point of taking the extra risk on it? The Aussie dollar, well, again, solid afternoon and evening there, morning, just starting to roll back a little bit at the moment. Again, this could, well, I'd rather this to the downside. It could be a trade back towards that daily pivot from what we're seeing. US dollar CAD, remember it's not 8 o'clock yet. I never make a decision until 8 o'clock's fully in there about taking a trade. The US dollar CAD still remaining soft here, pushing up again at the moment. It's again on the short term here, it's quite messy. Maybe above, if it gets back above that daily pivot, it could be of more interest. New Zealand dollar, well, it looks like my exit on the New Zealand dollar yesterday was the bottom, pretty much. I don't get that very often. Quite nice, but it looks to me like it's curling over, ready for another move down. Now, again, I'd wait for the reaction to this pivot. If it breaks the pivot, it's a go with for me. Maybe just wait, make sure the pattern looks fine, but that looks more bearish. If it bounces off it, we'll just leave it alone. So very simple. Dollar Swissy's is still in this sort of flaggy pattern. It's not really breaking anywhere at this stage. Let me just pull that back down there. It's not really doing too much at all, consolidating again, so and quite a mess here. Now it had been moving down pretty well, but with the stronger dollar, it would make sense for this just really to continue. Euro yen, it's a mess. And we start looking at some of these pairs here, and they're just, I mean, this is 1, 2, 3, 4, 5 days of chop. Basically, most of the week here it's quite rangy, choppy price action. Short term sometimes on here flatters what it's really doing, and there are opportunities off this hourly sometimes to do something, but it's if it's running between a range, it's halfway up at the moment, or halfway down, whichever way you look at it, and well, it does look soft where it is here, maybe for its S1, but I really don't like them when it's sitting like that. The Euro Aussie, usual suspects, actually come back to that where it's breaking. Finally, it's looking like it wants to break down out of this channel. We've had an attempt, pulled back in, sold. It's doing its best to do something here. Quite messy as we sit here at the moment, though. It's the same old picture across so many of these markets. Do prefer it on the short side, may just need to wait a little longer. Euro CAD, again, you look at it's 4 or 5 days consolidating. So on the hourlies, it's I had taken a long earlier in the week, closed out, break even. It's not really done too much since. It's lacking decent direction, and I don't really want to be just sitting in a position with it not going anywhere, particularly on a Friday. So for me at the moment, I'm leaving these. The pound is doing its best to break down further. It's I'm still looking for a swing. I'm waiting for it to break the lows. Where's my Heikin-Ashi bar? There we go, breaking the lows. It is the same low there, but just break those lows. But for now, it's again range bound, and as many of these markets are. I'm not going to go through the rest of these currencies at the moment. The picture is pretty similar across the board there. There's chop, there's lots of bars side by side. All it is to me is risk, and I'll be sitting predominantly out of it at this stage. Looking at other markets, gold. So gold ended up positive there again yesterday. It's looking reasonable, but again, it's range-wise, yes, it looks like it's got a chance of breaking to the upside here at some stage, but very small movements. Yesterday sold off there, managed to get the bounce. It's gone quite choppy and ugly. I don't do ugly. Oil caught more of a bounce overnight here. Yesterday ended up continuing in its sell mode, but really again in between. Now there's sort of the pressure and the rhetoric coming from Iran that they may be looking to join in this conflict, depending what goes on, which means that the US will end up joining in the conflict. So that could put a lot of pressure on oil eventually, and well, we could see this pushing back to the upside. I really don't like all the rhetoric that's going on there, so we'll stay clear of it, clear of the market. That is US dollar, the S&Ps. Well, yesterday another solid down day there, just remained pretty much as it started the day, and it's remained, if you look at there, quite ugly and choppy. So again, best avoided. The DAX, you know what I'm going to say. Well, the DAX is actually it's had its reaction. It had a reaction, I should say, to the monthly S3. It's just sort of pulling up and looking like it might roll back yet again. This might be one, if it runs below its daily pivot here, breaks the daily pivot, could be good for the S1. But the price action yesterday, it's just going to catch people all the time. This is my concern in it. When the markets are like this, it's just too much risk, and you're better off steering clear unless something develops during the morning and looks a lot better. Okay, that's pretty much it for me this morning. It's little point looking at these any further. I wish you a great day's trading, and I'll catch you tomorrow. No, I won't catch you tomorrow at all. I'll catch you Monday. Have a great weekend. Bye for now. Right, here we go.